So if you're self-employed, you will either set yourself up as a sole trader, where you will report your net profit on an annual basis. This is known as personal tax, and the personal tax year runs from April to April. You need to submit your annual tax returns and pay any personal tax by the end of January, which gives you around 9 months following the year end. If you're a limited company, your business year could run from any month, and it's not defaulted to run from April to April like your personal tax will be. Your business year as a limited company will start in the month that you first registered and started trading as a business, and that will run from 1 year from that point. You will then have 9 months to submit your annual accounts to the HMRC and Companies House and to pay any corporation tax. You still need to submit personal tax returns as a limited company and pay personal tax, which will be made up of any self-employed income and taxes borne from taking dividends from your company. From a mortgage perspective, there's 2 types of mortgage lenders that will help you as a self-employed person: high street mortgage lenders and specialist mortgage lenders. Specialist mortgage lenders will require 1 full business year of trading, whether you are a sole trader or limited company. Now, bear in mind, if you've been a sole trader for 10 years and then you switch to a limited company, you reset your trading history as far as the mortgage lender is concerned. So just be aware of that. The same applies vice versa. If you are a sole trader, a specialist mortgage lender will ask for an SA 302 or tax computation. A tax computation is the equivalent of an SA 302. You can download an SA 302 direct from HMRC login, or obtain a tax computation direct from your accountant. Either will do. In addition to this, you will also need a tax year overview, which is a document that confirms the amount of tax liable based on your tax return. You can obtain this from your HMRC login or your accountant. When the mortgage lender asks for these documents, do not supply your tax return application. This is also known as an SA 100 and will not satisfy the mortgage lender's request, as this only proves your tax return has been submitted, and you could quite easily submit an amended one a week after, which is why the mortgage lenders will not accept this document. So have clarity on the precise documents the mortgage lender is requesting. If you are a limited company, you will also need to supply these documents plus your latest set of business accounts completed by a qualified accountant. It's important to understand that once your latest set of tax returns or company accounts are over 1 year old, the mortgage lender will require the latest set of tax returns reflecting the most recent tax year. So after 1 year, your tax returns and company's accounts will effectively expire. So do not apply for a mortgage unless you've got your most recent accounts that are under 1 year old, or you'll be wasting your mortgage application time and putting your mortgage at risk. When applying to a high street mortgage lender, they will have a requirement for you to supply 2 years worth of tax returns plus company accounts for limited companies. The majority of mortgage lenders will average the last 2 years worth of figures. For a sole trader, they will use the net profit, which is your turnover takeaway expenses. And for a limited company, they will use either salary plus net profit or salary plus dividend, dependent on the lender you are applying to. It's worth noting, if you're a limited company, you can't just set up a limited company, pay yourself for 3 months and use those pay slips to apply for a mortgage. That will not work. You need 1 year's trading and you need to supply the documents I've mentioned. There's one mortgage lender that I know who will require you to be trading for 2 years, but will only need to see the most recent years of income figures, which is sometimes very useful, especially if averaging the last 2 years will result in the maximum alone being less than what you require. There are 1 or 2 mortgage lenders like Halifax or Lloyds TSB who may look at your situation if you've been trading for 1 year, and they may even take a projection. However, I'm not overly keen on this approach, as often it can lead to a declined mortgage when using projected figures, as it doesn't carry as much weight as, completed tax returns. If you're going to use these lenders and using projections, then be sure that all other areas of your situation are watertight. If you're looking for a mortgage and you've only got 1 year's trading, then you're going to be mainly restricted to the specialist mortgage lenders, who will have higher rates and higher fees because you're higher risk to them and because you only have 1 year of trading. High street mortgage lenders will reflect the better rates on the market and have lower fees generally, but will in order to be considered by them will require that 2-year trading history. If you've got a 2-year trading history, but averaging the last 2 years will bring your overall income down, you may also consider a specialist mortgage lender with your latest set of accounts. Mortgage lenders will also ask for business statements anywhere from 3 to 12 months, and these must reflect the income that your tax returns show. There are some exceptions where some businesses have seasonal related income, and you may need to clarify some information around this if your most recent bank statements show less income. Maybe you have twice the amount of income coming in at the start of the year, for example. The best thing to do for a self-employed person is to understand who the best mortgage lender is for your own unique situation. If you'd like a free chat in regards to your options, just book a free call with me. You will be speaking to me, and you can use the link in the corner of the screen or in the description below. Mortgage warning. Please note, we do need to let you know that your home may be repossessed if you do not keep up the mortgage repayments. So thanks for watching today's video. I hope this helps. See you in the next one.